Hello, guys. I'm gonna be answering a question. A lot of real estate agents, we call them realtors, they ask these questions because you see, in Canada, I think this is everybody's like favorite part-time thing. If you're doing a job, the next thing you're gonna be thinking of doing is, okay, I'm gonna become a real estate agent or a realtor. Very interesting. Yeah, you end up making, it's not, it's a good profession. It's a good profession. It's a good business to do, and you end up making money as well, most cases, but it's not that easy. Let me tell you, if you're just thinking of becoming one, um, it sounds easier, but yes, you wanna talk to people, what kind of people, about what kind of attitude and what kind of skills or communication or whatever, whatever the traits you need to for becoming a realtor. Anyway, so the question is, that what about the vehicle expense, the motor vehicle they are using, the car they are using, how to, what how does the expenses and the tax work for the car, related to the car. So I'm gonna be. I thought, okay, let's make a brief video on that topic because it's a very commonly asked question. Okay, so what happens is that as a realtor, you are either self-employed, right, or you can be incorporated as well. So let's discuss the self-employed part first. You don't have a corporation, you haven't incorporated, you are self-employed, and you became a realtor. You got the license and memberships and everything, and you're good. Now you don't. The car that you're going to be using is your own car, right? And you didn't buy that car on the business name, or it's not the ownership of business, right? Now, so how it works is that you have to keep a log of your mileage. You have to keep a mileage log. Why? Because at the end of the year, we have to calculate, when we are doing your taxes, we have to calculate the business use, right? So let me explain that to you. So, for example, during the year, you drove the car 1,000 kilometers, right? And in that 1,000 kilometers, 700 kilometers were for the business. Going to see a client, taking the client somewhere, going to the open house, or looking at a property or whatever, doing paperwork, meeting a lawyer and stuff like that, mortgage brokers, this and that, all those things. You know what I'm talking about, right? So you drove 700 kilometers for that, and the rest of the 300 kilometers you drove for your personal or family use, right? So in that scenario, 70% of the expenses related to the car are going to be business expenses. 30% expenses for that car are going to be for personal. So we can claim as a tax deduction only the business portion, which is the 70%. I hope you got the example. Now what kind of expenses related to the car? Pretty much all expenses which are related to your motor vehicle, right? So for example, let's say the lease. If you lease the vehicle, the lease expense is deductible. Again, the business portion, 70%, remember. If you finance the vehicle, you're gonna be depreciating it, right? The capital cost allowance, CCA, that is deductible for a car up to the value of $30,000 plus HST. So that is deductible. It's a slightly complex calculation I cannot explain, but you can do some research, or I might have a video on that as well. If you have a car which you just bought off, it's paid off, or it's some cash, you can actually still claim the depreciation on that car. Then the insurance that you pay, that the gas expense, the repairs or maintenance expense, oil changes, any supplies, cleaning, um, uh, windshield, washers, all those kind of things are deductible expenses. So all these expenses which are related to your car are uh, tax deductible to the extent uh, maximum business use. So if you have to, the first thing that you have to do is calculate your business use. So once that is done, then you can apply that percentage to all your car related expenses. And in case of an audit by the CRA, the CRA is going to ask you to produce a mileage log. So mileage log is basically uh, where you a logbook where you're logging in and logging out all your business use of the vehicle. You can use some apps as well for that purpose. And the second thing, all expenses related to these to the car, for example, gas expense, this and that. When you're claiming those, you have to make sure that you have receipts to support those expenses, because in case of an audit, CRA is gonna ask for these receipts. We have developed an app for self-employed people like realtors. So you can use this app. It's called Zoombooks. To you All you have to do is, for example, you just bought gas. Just take the picture of that receipt, and then Zoombooks is gonna save that receipt and also do bookkeeping for you, right? So that you don't have to worry about losing the receipt, and you can run different reports on Zoombooks app to see, let's say, how much did I spend on fuel during the month, or during 6 months, or 1 year, or whatever. You can do it provides you analytics and all that. So it's a good app to use. All right. I hope I've answered your question. If you have any comments or questions, please don't hesitate. Write it down in the comment box below. Have a great day, guys. Bye.